Morning everyone, greetings from Cape Town. I'm in Commodities. It's a small town on the Atlantic seaboard of Cape Town, and you can see it behind me. My parents are here from England visiting Commodities, and so we've come to visit them, and we'll be driving up through the inland and visiting some of the Crude later on. Anyway, today's about trading, and I'm going to get into the charts with you right now, sitting right here at the beach. Let's get straight into it. All right, well, I hope you can hear me, and because my microphone's not working either. For some reason the battery's gone flat, so I'm doing this under great duress for you. Let's have a look at what's going on. So I'm going to go through this pretty quickly right now, sitting here at the beach at the Com, and I'll show you an exit photograph when I leave. So these are the Forex majors, the euro, pound, dollar, yen on the top, and our positions are long on the dollar yen right from the bottom, and that one's actually, we've been short for quite a long time on this, and just bouncing off that Fibonacci level, big order block, and a nice spike low candle yesterday, making a slightly lower low, and then bouncing back up again. So it's a very, very key level, as you can see on this chart. Big order block, support level, 61.8% Fibonacci level, and we've got the trend line above us, the 20-period moving average, and a few other moving averages that we should mean revert to. So I'm looking for a few hundred pips. I covered this in the last video that we did, based on the dollar index, really. We also have a short position on the pound, but on the dollar index, let's have a quick look. And I hope this video is going to be watchable, because it's very, very tricky. So here's the dollar index down into support. There's a big support line down here, and we've had a number of days, 1, 2, 3, 4 days with very little correction, a little bit of a bounce on Thursday, a little bit of a bounce on Friday, and that's a nice reversal pattern at support. Now we're well below all the moving averages, 50, 20, 100, all the way up here. There's the 20, the green one, and the 20-period moving average normally would be the sort of place that you would expect to revert to. That'll move down on Monday or Sunday night. That's tonight, a little bit further down, perhaps down to 106, and we're currently trading at 102, 103 actually. So we could have a 200-300 pip bounce on the dollar index, maybe even just 100 pips back to the 200-period moving average there, and that would bring down the euro by 100 pips, the pound by 100. You can see the euro's well above its 20, 50 and 100 all the way down here. Same with the pound. There's the 20, 100 and 50 way below us, and the 200 are just below us on both of them. That's the purple line on the euro and on the pound. We could expect at the very least to pull back to the 200 after the breakout. It will be a breakout pullback trade to the 200. So that's it on currencies. Generally looking for a bit of dollar strength early in the week, and then maybe more weakness. Now here's the big thing. On stocks, I said this was the mother of all clearouts or fake breaks or bear traps, and that's what we got. Massive spike low down into support, breaking down through the 200. This is the S&P 500 on the day chart, and after that tweezer bottom, this is really interesting, a tweezer bottom formed, and that was our reversal pattern to go long, and right at the 200-period moving average. Now that tweezer bottom is only invalidated by a daily close beneath it. We have not yet had that after 2 days of trying. The first day, Thursday, spiking down a bit, and then Friday a massive spike down, clearing out millions and billions and if not trillions of dollars of stock. So that set us up for a nice bounce. We're just down to the 200, we've pulled back about 7 or 8%, and then on the NASDAQ we pulled back 11.2% and formed a very similar picture. These are super important. If we don't hold here this week and tonight, then this market will probably go down quite significantly. We could get down to, I don't know, below 19,000 on the NASDAQ and much, much lower. Maybe quickly, let's look at the S&P. We're just under 5.8 right now. We could get all the way down to 5.6 and maybe 5.4 on the S&P. That's what it looks like. Notice that we've got a 5,400 level right down here and a 5,600 level just below us at this previous swing high. So that's the way it looks. People are looking at me a bit strangely sitting here on the boardwalk in Commodities talking about stocks. Anyway, so we're long on the NASDAQ and then long on the S&P. We got long on Friday after Friday's attempt, after that tweezer bottom. That trade was not invalidated by the spike low on Friday, nor was it on the NASDAQ. So we remain long on those, and we're also long on IWM, a new position on Friday. This is the small cap ETF, and I think this could do okay. Now, the jobs report came out a little bit weaker on Friday at 150,000 jobs, losing quite a lot in the governments, but not catastrophic, but not good either. And I think that's pretty good for the stock market. And I think that's what the market recognized after the NFP came in weak, but not catastrophic, sort of lending credence to the fact that the Fed might consider cutting rates sooner rather than later, maybe as early as May. I don't think a lot of people believe that's true, and nor does the CME Rates Watch tool. But I think the idea or the inclination is that at these incredibly oversold levels on the stock markets, we've had a decent 10% pullback. on the NASDAQ, and with the idea that we're seeing a bit of weakness in the jobs market, I think we'll see a lot more going into the next jobs report after the non-farm payrolls government adjustments get added in. It will be super interesting to find out what's going on with that. But all of this sort of lends credence to the idea that we may see, maybe not super early, maybe not dramatic, maybe maybe 2 cuts this year instead of 1, maybe 1 instead of none, maybe 0.5 instead of 0.25, who knows. But I think that's what the market might have seen, and that will help the small cap market as well. IWM, that's what we were talking about, and I expect a bit of a bounce there too. Right, now I can't go into all of these. The sun's getting too bright for me to see, but we're also long on Coinbase, we're long on Tesla as well. Those are just trying to hold support. Coinbase doing a little bit better than Tesla. Now going across to Bitcoin, it's really, really important. These are in lockstep. Bitcoin and Ethereum, let's just talk about Bitcoin, in lockstep with the S&P and the NASDAQ. And apart from this sort of very messy part here, in general, they've been doing a pretty similar thing. Now we really have to see Bitcoin holding this 200 period moving average like we do on the NASDAQ and the S&P, and we need to see all these spike low attempts. That's incredibly messy part of the market after that massive clear out, another clear out following that about 3-4 days later, and now we're maybe even due for another clear out. I hope not. I'm hoping that this last spike low a few days ago down to 78 and some change will hold, and that Bitcoin will carry on rallying up. We've got quite a healthy position long on Bitcoin and Ethereum and XRP. I've got no positions on gold or silver, platinum, palladium or copper. I'm just waiting to see how these markets turn out. I keep on thinking I should be buying gold, and then on the next day I think I should be selling gold, and we're still stuck under these 2 rising trend lines. The 20 period moving average, it closed right on top of it on Friday, so who knows. I think we could have a correction down to 28.20 or 27.20 into some of these order blocks and trend lines and moving averages down below us. It's incredibly overbought and overextended, and I think we could do with a bit of correction on gold and even on silver, but long-term targets above $3,000 on gold, maybe 3.2, 3.4 before a deeper correction. And on silver, I think we could get up quite a lot higher before a decent correction. It all depends on what gold's about to do, and I think gold will lead the way. And looking at silver, we are just holding that trend line, even though we dip below, and we're holding the 20 period moving average. So looking a lot stronger than gold actually, and holding those highs pretty well. So either silver or gold should rally sometime in the near future and drag the other one up with it, and we'll be watching that closely. But watch out for a pullback on both gold and silver. Silver could pull back to its 200 down at about $30, and gold, as I said, 27.20, 28.20. Looking at natural gas for those of you, and oil and so on, uranium. I expanded my thoughts on uranium last video, so please have a look at that. I'm quite bullish on uranium. Natural gas, we've now hedged our trade completely. I'm going to do a proper update on this tomorrow, but whilst I'm sitting here in Comic, it's a bit difficult. But this is natural gas. My positions have been well broadcast. I was short from there, re-shorted there. We got into some profit, and just the moment that we were getting into some profit, we bounced off the 50 period moving average, formed a reversal candle, and we immediately hedged at the close of that candle. So now we're hedged at break even essentially. I think we have 1 or 2 cents in profit on this at the hedge point. So we may as well just be out of this market for now, looking again for natural gas to move up or down. I have no idea which way the next move will go. We'll find out in a few hours' time when the weekend gap starts and opens up. But I think potentially we could go all the way back down to $2.50, or we could go all the way up to $5.50. And right now, between that, in the middle of that range, we're diddling in the middle. Let's see how we open up today, but I'm looking to sell into any significant rallies and buy into any significant dips. Please watch out on X and watch out in next week's video, which I'll probably do on Monday. And while I'm talking about natural gas, I'm also releasing a course on natural gas this month. So if you'd like to join that course, there's a link below. Just put your name in the survey. Tell us what you think you'd like to see in the course. And it's a 2-3 minute survey. And by taking the survey, you'll get the opportunity to put your name on the early bird list for the natural gas course. So please go ahead and do that. And also watch out for my posts on X and next video, probably tomorrow. We're also short on WTI, waiting for this Moab, mother of all breaks. Still has not yet happened, but so far so good. We've moved down to the Moab line. That's this mother of all breaks, as you've heard me say many times before. And when we do break down there, I expect us to move down to the bottom of that shorter term channel, down following the red line really, and then down to the longer term trend line a little bit further down. We could see WTI get all the way down into the 40s and even 30s as time goes on, and I'm holding for a break below Moab to rapidly follow this red path. You can check that out on your charts to see where the levels are. I've got some people behind me here on the beach, so please just forgive the noise if there is any. It's no problem for me. So that's it on natural gas, but as I said, I will do another video next week, early next week, probably tomorrow morning early. And then going across to VIX, we have nothing on VIX. We took our profits at about 21, and we're also half, or more than half now, exited from TLT longs at the 200 moving average, waiting for a pullback. We could rebuy on these dips, maybe not a bad idea, and probably, in fact, I probably will, at the 20 and the 100 moving average confluence here, and it might be due for a bounce early next week. So be watching for that. Ideally, though, I just want to get out of this trade at about 94, maybe 95, and just exit this altogether. I think this might be very choppy and messy throughout this year, as uncertainty about the yield curves and interest rates and the bond markets in general. It's just generally a very uncertain market. Now, going across to softs and grains very quickly, we remain long on sugar. That formed a one up, one down here on this daily chart. Looking good at the center of the channel line. We're still short on cocoa. Nothing's changed for about a week or so. Still looking good. Looking for this move to continue down towards the bottom of that sort of apex down there. You can just pause this and have a look. I'm not zooming into these charts simply because it's very difficult to see these charts in this light, sitting here in very bright sunlight at the beach. Coffee, we still remain short. We took another short tranche there at the 78.6% fib, as you all know, and looking for a move down. Actually, I will expand this chart just to quickly show you where I think we could get to. I'm just aiming for the top of this channel, this rising channel, and maybe this horizontal-ish line down here, and looking for a move down. First of all, down through that swing low and then down towards that sort of level there. And then very briefly, we're also long on corn, bouncing up very nicely. Cotton as well, superb bounce last week on Wednesday, Thursday, and Friday with a gap, moving all the way back up to that level there and looking fantastic. I think the cotton traders will be pleased with that one. Orange juice, we're flat, we have nothing. And wheat, we have some longs on, also bouncing up yesterday, same in soya. We're long on soya. We've got 3 tranches right down at the bottom, well below us. So all the commodity staples did well last week, but the commodity luxuries like cocoa, coffee, and orange juice all came off, and that's what we were expecting to happen. And that's it, folks. Remember the natural gas course I'm launching this month. Make sure you enter the survey, get your name on the early bird list. There's a link below. And I'll see you in another natural gas video early on Monday morning. So I look forward to seeing you then. Take care. It's a great little town, lovely to visit. A little bit expensive, but very peaceful and very safe. So I hope you enjoyed the video. I'll see you in the next one. Take care.
Woke up this morning, market's feeling tight. Check my phone, AI says we ain't alright. Charts looking slippery, prices in decline. Wall Street dancing like it's conga line time. SC took a tumble, NASDAQ hit the floor. Bulls are crying, bears want more. Traders on Twitter shouting sell, sell, sell. But me, I just sip my caipirinha and yell, oh well. Oh well.